Welcome to The Explainer. Today, we're diving into a really fascinating paradox right at the center of the tech world. We're talking about NVIDIA. Right now, this is a company posting the kind of numbers most businesses can literally only dream about. And yet, Wall Street is growing increasingly anxious. Whether you own the stock yourself or honestly just use the internet, NVIDIA's ripple effect is massive. So today, we're going to unpack exactly why the market is sweating, and we'll separate the underlying business from all the hype surrounding the stock. Okay, let's jump straight into this absolutely massive number. 97%. That is the astonishing expected year-over-year revenue growth for NVIDIA's fiscal second quarter. I mean, nearly doubling your revenue in a single year? That's impressive for a tiny, scrappy startup. But for a multi-trillion-dollar titan, that is just staggering. Now, with growth that high, the obvious reaction should be to just blindly hit the buy button, right? But, investing becomes incredibly dangerous when the obvious answer feels just a little too obvious. So today, we are investigating what the market knows that this giant headline number is actually hiding. It's time to look under the hood. Part 1. The evidence. Tracing the cash in the AI ecosystem. To solve this mystery, we've got to look at where all this cash is actually coming from. The sheer scale of the shift in their business model is unbelievable. Out of NVIDIA's $81.6 billion Q1 revenue, a massive $75.2 billion of that, which is 92%, came purely from data centers. This proves they really aren't just a gaming or PC graphics company anymore. They are the absolute central engine of the entire global AI infrastructure build-out. But here's where the story gets a bit tricky. NVIDIA's growth depends entirely on this continuous AI spending loop. Basically, cloud giants spend billions on infrastructure, that money flows straight to NVIDIA for the hardware, that hardware powers new cloud AI services, and then, and this is absolutely crucial, those cloud companies have to monetize those services to justify doing it all over again. We really have to ask ourselves, where does the cash ultimately come from if these massive AI services don't start generating serious returns from regular end users? And the plot thickens significantly with numbers like this. See, NVIDIA isn't just selling chips. They've reportedly arranged over $500 billion in financing for AI infrastructure. Plus, they've got this $105 billion OpenAI data center lease guarantee. They're quite literally financing the very ecosystem that buys their own products. So we're actually looking at two very different realities here. On one side, you have natural demand, a boom where AI explodes because end users are creating genuine economic value. But on the other side, you've got finance demand, where the system relies on this interconnected financing structure and endless amounts of capital just to stay afloat. The big question we're facing is whether NVIDIA is just strategically supporting its network or if they're heavily financing it to mask a huge underlying risk. Which brings us to part 2, the moat versus the threats. Can the competition catch up? Let's see how NVIDIA's defenses hold up. To their credit, they are definitely not standing still. They're aggressively pushing past their Blackwell architecture and deploying the new Vera Rubin platform. With massive deployments for companies like SpaceX AI and Grok 3 LPX, they are gearing up to power not just that initial AI training phase, but the whole next wave of continuous AI inference tasks. That's where AI agents are basically performing millions of actions seamlessly in the background. And this right here is the brilliant competitive advantage you really need to understand as an investor. NVIDIA's moat isn't just a super fast piece of silicon. It's a massive, incredibly sticky software and developer ecosystem. We're talking CUDA, global networking, cloud compatibility, the whole shebang. A competitor can't just slap together a faster chip. They literally have to replicate years of accumulated ecosystem development, and that takes incredibly deep pockets and a whole lot of time. But investors are sweating because, well, those deep pockets do exist. We're talking about hyperscalers like Amazon, Google, and Microsoft, and they are aggressively building their own custom silicon. Throw in some fierce, cutthroat competition from AMD and severe geopolitical export restrictions capping sales to China, and suddenly all that market anxiety starts to make perfect sense. Let's dive into part 3, the valuation trap, separating the business from the stock. This is really the crux of our explainer today. It's a critical lesson on why a genuinely great company can actually be a terrible investment if you buy in at the wrong price. Here is the ultimate trap. Investors aren't buying yesterday's 97% growth, they are buying future cash flows. Think about it. Even if NVIDIA's business grows by an absolutely incredible 50%, if the market's valuation already priced in 70% growth, the stock is still going to fall. In this high-stakes game of extreme expectations, being just good simply isn't good enough anymore. We also have to aggressively monitor their profitability during these big product transitions. Just look at the slight dip right here, going from a 74.6% gross margin down to 73.4%. I know it seems super small, right? But if top-line revenue growth slows down while margins are simultaneously compressing, the underlying math of their valuation turns ugly incredibly fast. Because of that dynamic, you can basically forget the headline beat entirely. Sophisticated investors, they are laser-focused on that $104 billion forward guidance target. That is the specific number that tells the market whether this massive AI growth machine is accelerating, stabilizing, or if it's finally beginning to slow down. Oh, and just a really quick note for the income chasers out there. NVIDIA's tiny 25-cent quarterly dividend translates to a roughly 0.5% yield. That literally won't even buy you a cup of coffee. It brilliantly illustrates that you're absolutely not buying this for income. This is purely a capital appreciation and AI growth play. Now, to really grasp the scale of the anxiety we're talking about, just look at the options markets. They are currently pricing in a 5.4% move after earnings. That means a staggering $280 billion in market value could swing in a single night. To put that into perspective, that's like the entire value of a company like Netflix just vanishing or appearing overnight, based purely on these expectations. It is effectively a giant referendum on the entire AI investment cycle. And that brings us to our final section, the verdict: 3 futures and a final judgment. With all this evidence on the table, it's time to close the case file. Depending on how those custom hyperscaler chips perform in the wild, and if the cash actually keeps flowing from end users, the market is going to force NVIDIA into one of 3 distinct futures. Number 1, the AI boom continues, inference expands, and the wild valuation is totally justified. Number 2, growth normalizes. NVIDIA still dominates, but the valuation multiple painfully contracts. Or number 3, the massive capital expenditure cycle breaks entirely, monetization fails, and growth just collapses. So, breaking this down by your specific investing strategy, long-term believers in AI infrastructure can clearly see a buy here purely for the business quality. But anyone requiring a margin of safety, like your classic value investors or short-term traders, well, you are facing a very high-risk scenario right now, mostly due to the sheer crushing weight of these market expectations. Ultimately, our investigation concludes with a watch status. But it's super important to note, this is not because the underlying business is weak. Actually, it's precisely because the business is so phenomenal that the market's expectations have become dangerously, almost impossibly high. As we wrap up this explainer, I want to leave you with the ultimate question that every single NVIDIA investor must honestly face. Even if this incredible company wins today and totally beats the numbers, can they possibly beat the astronomical expectations of tomorrow? That right there is the absolute difference between an amazing business and a great stock at today's price.